The real estate market is going to crash right now. So you better be ahead of the curve and sell your home. That's what some people are saying right now. Actually, there's more than some people that are saying this. This is what they actually believe. The real estate market is going to crash. Everything is overvalued. The stock market's going to crash, right? And the stock market, in some cases, is a leading indicator to what is happening in the real estate market. So that means that if you're thinking about selling, you got to sell now because home values are going to plummet in the next 6 to 12, 18, 24 months, upwards of 50 to even 80%. That was the video that I watched recently from economist Harvey Dent Jr. Or was it Harry Dent? Harry Dent. I think it was Harry Dent or it was Harvey Dent. Let me see just to make sure. Harry Dent. I don't know why I'm thinking Harvey. I'm thinking of Suits. Well, anyway, that's what this live stream is all about. Is the real estate market really going to crash? Are you in a position now where you have to sell your property? If you've been thinking about selling, do you really fear that the market is going to crash 50 to 80%? And then based on what? What is that based on? You know, that's a really good question. What is that based on? What are people thinking? What are these economists thinking that is going to make the housing crash happen in 2024, 2025, 2026? The interview with this gentleman, with another real estate broker was very interesting, because a lot of the things that he was saying, it's like, okay, I can actually get down with that. I actually believe in some of the things he was saying. But there's one extremely important piece of information about the housing market that surprisingly, very surprisingly, it was mentioned very briefly. This interview, and I'm not going to play the whole interview. I'm going to go back to it. I have some notes that I took about it. But this interview mentioned this one thing, the most important thing, in my opinion, when it comes to the housing market and if we are going to see a crash or not. And it was like barely mentioned. He barely talked about it, So that's why I always hesitate when people say the housing market is going to crash, because there's this huge piece of information that was not mentioned, and I truly believe that there are just those people out there. Now, this guy's an economist. He's been around for 30 plus years, right? And I'm not saying that he's absolutely off base. He's absolutely wrong. Everything he was saying is crap. I don't claim to be an economist at all. No, not at all. I'm a real estate broker and I'm a real estate investor. I've been in this business for 9 years and I saw it on an upward trajectory since I got into it. Okay. Since 2015, when I first started dabbling in real estate, I've seen it. It's just gone up and up and up and up. And at some point, it does need to come down. I understand that. I completely understand that. But a 50 to 80% price drop, value drop, that seems crazy to me when you're talking about the US as a whole. It seems very off base to me. Right? So I'm thinking to myself, I'm like, oh my gosh, I purchased my house in 2018 for $395,000, a very similar home to mine in my neighborhood just sold recently for, I believe it was $620,000. So by that metric, I could probably get somewhere in the 600s for my home. And if he's saying that it's going to drop 50 to 80%, then my home will be underwater from what I paid for it in 2018. And so will everyone else for the most part, And to me, it doesn't make sense, right? Like, it doesn't really compute that much to me. I'm like, okay, where is this guy coming up with this information? So that's what I want to touch on today. I apologize for the different backdrop. I am actually in Dallas right now for a conference that I'm super excited to be at. And yeah, I'm going to present my screen. I'm going to show you guys some stuff. Alrighty, let's go. These are just my notes that I took on it. And I want to share with you what I think, what I feel about what is happening in the real estate market currently and where we go from here, because it's not very unlikely that a downturn will happen. That's not unlikely at all. I actually believe that it will. But a 50 to 80% crash. Okay. So, number one, the imminent housing market crash. Harry Dent Jr. predicted the housing market is on the brink of a significant crash. Not little, not a minute one, a significant crash. He compares the current market conditions to the previous bubbles, particularly the ones that preceded the major economic downturns in the 2008 financial crisis. That was interesting to me because he kept talking about the signs of the bubble. He keeps saying that we're in a bubble, right? Very similar to the bubble that we were in 2006, 7, 8. So that was interesting to me because I'm thinking to myself, okay, if you're in a bubble at some point, the bubble has to pop, you know? And back then, the lending standards were much different than they are today. Much different than they are today. Okay. People were getting mortgages for homes that were 110% of the value, 115, 120% of the value. So if somebody's getting a mortgage for a $3,000 home and they're getting $320,000 on it, that's over leveraged, right? That property is over leveraged. The value of that home is at one price, and the bank was willing to lend above and beyond that price. You're over leveraged. You're negative equity into that property, right? That's the loans that were being given out, these subprime loans. In today's market, you're not really seeing that at all. I mean, you're not even really seeing that many people utilizing 100% financing. And my VAs, a VA loan, you can get it. A USDA loan, you can get it as well. 100% financing. But not a lot of people are doing that. Now, I do understand, and again, I always talk about the seller side of things. I always try and bring it back to the seller side. I definitely understand that sellers are in the driver's seat for the most part right now in most areas, not everywhere. And actually, I had a very interesting conversation with a colleague and last night here at the conference. I want to share that with you. But for the most part, drivers or sellers are in the driver's seat. They are in a good position to sell their home. So the signs of this bubble are evident, including rapid price increases, which is true, and speculative buying. People essentially are buying, speculating that the value is going to increase over time, right? He warns that this crash could be more severe due to the extent of overvaluation and the interconnectedness of global economies today. Homeowners and investors should prepare for a sharp correction in prices, which could lead to widespread financial consequences. Interesting. Widespread financial consequences. He spoke a lot about the Japanese economy and the Chinese economy. Now, again, I don't ever claim to be an economist. I don't ever claim to know how other countries work. I just listen to other people, And what I've been hearing for a long time is that the Chinese population is decreasing, right? So the number of people that are dying is not keeping up with the number of babies being born essentially isn't keeping up with the number of people dying. So the population is decreasing, and that a lot of people were purchasing homes and they have multiple homes, and not a lot of people are actually buying these properties, right? So if you have an area where the population is decreasing, that means at some point the amount of housing that's going to go up or need to be purchased is going to decrease as well, right? And we're talking decades. We're talking this would happen in decades from now. The population in the US is continuing to grow, which means that the number of houses that needs to be built also needs to go up, right? And from 2008 until now, the number of houses being built has not kept up with the demand. Not at all, not even close, right? The amount of homes that would have to have been built stopped. They stopped building during the economic downturn in 2008, the great financial depression or recession, excuse me. So that means that the population continued to go up and up and up, but the houses didn't, which put a strain on the supply. And we're still feeling that today. We are still feeling that today. Ajit, USA is a legal colony of Church of England. Uh, I don't really know what that means. Sorry about that. Got my coffee this one. USA Happiness Index, $36 trillion. Extreme poverty, cost of living crisis, cost of survival crisis. Well, the $36 trillion deficit is a real thing. You can't deny that at all. It's gotten worse, way worse since 2020, since the pandemic. USA is in debt a severe amount. And the majority of that debt came in the past 24 years, 24 years. And a big chunk of it happened in 2020. Extreme poverty. I mean, there is absolutely poverty in the US. I don't know if it would be defined as extreme. Cost of living is ridiculous. So you're spot on there, man. The cost of living sucks. And, since I'm in the real estate business, unfortunately, I see that playing out and affecting the first time home buyer pool the most, which stinks. And then the cost of survival crisis, I'm not necessarily sure about that, but look, I'm not going to get into anything that's too off base from real estate, because that's not what this channel is about. But I understand that the affordability of housing today is out of control. The affordability of housing today is out of control. And I believe that's what, this guy Harry is saying in some way, shape, or form. Like, he did mention it. He did mention the affordability crisis is out of control. And I'll make sure that I link to that video that he put out so you can watch it for yourself. But again, with the affordability crisis being there, being present, at some point, I feel like we have to plateau. Like, values have to plateau and even come down slightly. I do believe that's going to happen. I don't know when. I can't predict when. I'm not that smart. But I don't see a 50 to 80% decrease in home values. That to me just seems a little bit crazy. So he mentioned that was the first major point, the imminent housing crash. Again, the one big factor that wasn't talked about, he didn't mention it there either when he started to go on his rant there. Then we have rising interest rates. So interest rates are a critical factor in the housing market. Absolutely. And as they rise, the cost of borrowing increases. Okay. Dent argues that higher interest rates will reduce the affordability of homes, making it more difficult for buyers to qualify for mortgages or afford the homes that they want. It was interesting. Like he talked about this video actually came out in July, and it was really like the essence of the video was geared towards sellers and the selling now aspect of it. And I'll touch on a couple things he was saying within that directed towards certain sellers. Um, but interest rates have gone down. Interest rates have gone down. Okay, we're at, I believe, 6.39%, 30-year mortgage rate, 6.35% as of, and this was actually August 29th. So if you look at it today, I mean, you can get interest rates in the fives right now. I had a conversation with a loan officer last night, so August 4th, and he said that he got someone an FHA loan for 5.6%. So interest rates are actively going down, okay? Interest rates are going down, which is good. It's especially good for buyers because they can start to afford more and then their monthly payment will be less. Because if you remember, it was 8% this year, which historically is not high, but it's high for what we have seen for the past, even since I've gotten into real estate, right? So that's one of the challenges that we've been dealing with this year is a high interest rate, but the interest rates are actually going down. When interest rates go down, when interest rates go down, that is good news for sellers as well. And not a lot of people think about this. Not a lot of people think about that because if interest rates go down 1 point or 1.5, which is what we have seen, they've gone from 8% down to 6.5, even less than 6.5. And again, I just mentioned that, and some people are getting 5.5, and you can buy down the rate and probably get it in the low fives, 5.3, right? That means that there will be more buyers interested in your home because now they can afford a bigger property that costs more. If more buyers are interested in your home for sale, that gives you more of an opportunity to get multiple people interested in your home, to get multiple offers in your home if you list it for sale, and to get better terms and a better price for your home when you sell. So low interest rates have a positive effect for buyers and for sellers. And we are actively seeing those interest rates go down. Now, the Fed said that they are planning on reducing rates in September. They're going to cut it by, I think, 50 basis points. So we might be seeing 30-year fixed conventional loans in the high fives, maybe by the end of the year, Q4, beginning of Q1 in 2025. So that's something to consider as well. Back to Harvey, back to what he's saying. This decrease in demand, which he believes is happening, will put downward pressure on home prices, leading to a potential market correction. The Federal Reserve's actions to curb inflation through rate hikes are double-edged sword as they help control inflation, but also risk triggering a slowdown in the market. Now, here is the key with real estate. If there are a number of buyers who are interested in a property in a certain location, in a certain neighborhood, in a certain school district, but there aren't enough properties for sale to feed that buyer demand, You're going to continue this cycle that we're in. Real estate is very local. It's very local. The conversation that I had with another agent, he's in the Austin market. His words to me, he bought his house in 2021. He just made a video about it. He's underwater from what he paid. The market, he believes, and this guy's a real estate professional, agent, and he's a lender. He believes that the market did crash in Austin, Texas. So what his home is worth now is less than what he paid for it. Okay. What his home is worth now is less than what he paid for it. He was telling me that his neighbor's house is currently for sale and it was listed $40,000 for less than what they bought it for a couple years ago. So they're already taking a haircut on it. And it hasn't sold. So eventually they're going to have to reduce the price and sell for even less than what they paid for it. Okay. And that's the Austin market. It shot up in COVID. Values skyrocketed. So many people were relocating to Texas and they wanted to be in that Austin area. And then they just overpaid for homes. And now the buyer demand is not as strong as it was. Okay. The buyer's demand is not as strong as it was. And that market that he's in, that specific market that he is in, has crashed because now he paid more than what it's worth. And if you wanted to go and sell the property, he's going to sell it for less than what he paid. In real estate, it is very hyper local. Like it is extremely hyper local. So that means that what's happening in that market in Austin doesn't necessarily translate to Milwaukee or Bend, Oregon or Portland, Maine, you know, in my market. So I'm in Greater Philadelphia. So we have Philadelphia proper, the city, and then you have what they call Greater Philadelphia, which are the counties that surround it. Bucks County, Montgomery County, Delaware County, Chester County. I live in Chester County. Chester County is the wealthiest county in the state of Pennsylvania, right? So that means that people who have purchased homes or who live in Chester County, it's a very sought after location. Between Chester County and Montgomery County, and even Delaware County, the top, some of the top 25, a majority of the top 25 school districts in the entire state of Pennsylvania are located in the Greater Philadelphia region, in those counties, and Bucks County as well. It's a very sought after location, and the values have gone gangbusters. They have gone up so high in these areas. Okay. Now, do I think that there's an imminent crash that is going to happen in my area? No, not at all. Because I know for a fact that the buyer pool is still very, very strong. And the inventory has not kept up with the amount of buyers who are interested in buying in this area. It hasn't. It has not even come close. It has not even come close. So when I'm hearing this conversation with Harry Dent, and he's saying that we're going to see this 50 to 80%, I'm like, okay, where? You can't make a blanket statement like that for the entire country. You can't, right? And I understand what he's saying here. The Federal Reserve's actions to curb inflation through rate hikes are a double-edged sword as they help control inflation, but also risk triggering a slowdown in the market. I get that. But those rate hikes from recent news and what is actually happening in the market now have stopped. Those rate hikes have stopped, and now they have come down. So right off the bat there, the interest rates are not going up for the foreseeable future. I can't guarantee that. You can never guarantee that, ever. But for the foreseeable future, that's where we're at. Now, the next thing that he talked about was the overvalued market, and this is what I believe. This is what I believe, and I trust what he's saying there, because I definitely think the market is overvalued. The current housing market is significantly overvalued, with prices far exceeding the levels justified by economic fundamentals like income growth and employment rates. Yep, I couldn't agree more. Incomes and salaries have not increased nearly enough to support the significant increase in home values. It is what it is. It's just a fact. Salaries have not gone up. The I believe the average salary for household income right now is close to $80,000. But what can a buyer buy with $80,000? With today's interest rates, with today's taxes, with today's insurance? 200, 250. And wherever, you're hearing this from in your market, what kind of house can you get for 200, 250? Right? It's a challenge. In my market, 200 and 250, you're going to be in a tiny, tiny home that needs a lot of work. Okay? Tiny home that needs a lot of work. And there's not even that many homes for sale in that price range. Like, uh, yeah, I mean, I look at the MLS consistently, and I'm like, in that price range, there is not much. Okay? So that means, though, that if you did, and this is like the double-edged sword, because, I'm talking about the affordability aspect of it, but if you did have a property that you were selling and you're in that 200, 250 price range, there's a ton of buyers looking for that, right? And there's a great chance that you're going to have a bidding war, and you're going to get great terms for it. And people are going to make offers, like really, really great offers for it. So that's like the double-edged sword of, you have the housing unaffordability, but then at the same time, if you are a homeowner and you put your home up for sale in that lower price range, it's good news for you, because you're gonna but then, right, you'll get the terms, you'll get the price you want, but then you're most likely going to be a buyer as well, and you're right back into it. You're right back into it. You ride the highs of being a seller, and then you ride the lows of being a buyer, okay? And that's challenging. It's challenging for a lot of people. But I 100% agree with what he's saying with the overvalued market. Dent suggests that this overvaluation is unsustainable and that a correction is inevitable. He compares the situation to past bubbles where prices detached from reality, leading to sharp declines when the market finally corrected. It 100% is unsustainable. The values can't continue to go up as high as they've gone up in the past 4 years. It is unsustainable. There's no, like there's no way around it. There's no way around it. I like I mentioned before, I bought my house for 395. Now, we put a lot of work into it and updated a lot, and we could probably sell in the low 600s now. So we're talking a significant increase in value in my market, in my main market in Chester County in Pennsylvania. I mean, you're talking like a 25, 30, 35% increase in some areas over the past 4 years. It's crazy. Houses that were selling for $500,000 are selling for $725,000 in a somewhat short amount of time, right? We're talking years. hundreds of $1,000s of increase in value. That is unsustainable. Does that mean that the market's going to crash 50 to 80%? No, not at all. How? Because if there's still buyers that are, it's the fundamental aspect of real estate, supply and demand. That's what he did not talk about. It's the fundamental aspect of real estate, supply and demand. If there is a large amount of buyers that still want to be in certain areas, which there are, because the millennials are one of the largest, if not the largest buying pool right now, especially in our area. And a lot of them are moving out from the city, right? There has been, I'm not going to say a mass exodus, but an exodus of people leaving the city of Philadelphia, coming out to the suburbs because they want some space, they want a bigger house, they want to be in a good school district, right? And there's a lot of people that have not purchased a home in the past few years that still need to. So that means that when sellers do decide to sell in a lot of these areas that have the desirable school districts, desirable townships, desirable homes, desirable neighborhoods, like those homes pretty much fly. They fly off the shelf. There has definitely been somewhat of a slowdown. I can't say that every single home is getting multiple offers. The inventory has crept up a little bit, not a lot, but it definitely has. I think we're at about close to maybe 2 months of inventory, maybe a little bit less, and then healthy market is somewhere around like 5, 5.5. So we're not even close to a healthy market. It's still a very strong seller's market, you know? So I do believe strongly in what Harry is saying. The fact that with the overvaluation and with the stock, even with the stock market, because he kept saying that, the stock market is the leading indicator. If the stocks start to plummet, real estate doesn't fall back, or real estate doesn't fall too far behind. So what happened in 2008, stock market crash, and then look what happened to real estate. The difference now, the one of the biggest differences now between 2008 and 2024 is that homeowners have a ton of equity in their homes, which to me seems crazy that it would be wiped out just like that in a matter, it's never just like that. It always takes time. But to me, it seems like based on what he's saying, the 50 to 80%, like it just doesn't feel likely. It doesn't seem likely just with the amount of inventory that is still not available for the buyers who still want to buy. Okay. And I can't base my market on the entire US as well. So it's very local to where you're at. I could say to my friend that I was talking to, his market in Austin crashed. He's underwater. I'm well above water in my area. Well, what about Milwaukee? What about parts of California, right, where values are still going up? It's very different. So again, to make a blanket statement that the entire real estate market's going to crash is bullshit, in my opinion, unless something major happens and the supply of homes coming to the market far exceeds the buyer demand. The excessive optimism and speculative buying in today's market are reminiscent of previous peaks before major crashes, making the potential for a significant downturn very real. Now, excessive optimism and speculative buying. That really signals to investors, right? The excessive optimism and speculative buying. Because the average homeowner who sells her house and moves up, the average homeowner who sells their house and moves down, The average renter who wants to buy their first home, they aren't necessarily buying for optimism and speculative buying, hoping that the values are going to significantly increase. They just want to get in a home. It's not speculative. They want to get into a home and live there. So like this conversation, the whole time I was watching this video and this conversation, I kept thinking to myself, because he mentioned residential. He kept saying residential. And I'm like, I think you mean for investors and commercial, right? The commercial market has tanked big time. But he kept talking like it was residential. And he kept saying that for the sellers that have multiple properties, if you have that second home, if you live in my area, right, you have second home vacation homes in the Pocono Mountains, the Jersey Shore, Delaware Shore, places like that, Outer Banks. He's like, if you have that second home, sell that second home because it's gone up. The value has increased pretty significantly. Sell your second home and start hoarding and saving cash, because when the market goes down again, you're going to be able to buy homes at 30 to 50% the value that they were, or 50 to 80%, right? 30 to 50 cents on the dollar. That's what he was saying to homeowners for the most part. Sell a home that has a lot of equity, save cash, and then invest when everything crashes. But to me, it seems like he should really, it seems like what he's saying is more based towards investors. Because again, I don't, the average home buyer is not buying on speculation. they're, they're buying because they want to live somewhere better than where they're at now. That's it. People buy homes not as an investment. Uh, I I mean, I look at things differently because I am an investor. But the average person who's buying a home does not buy it as an investment. In fact, you can make the argument that a home that you purchase is a liability and not an investment, because it's not making you money, but you're paying on it, right? It's not necessarily an asset, but it is an asset. So that was just so strange to me, that how he was pitching that. The next aspect he was talking about were demographic shifts. So the demographic trends, particularly the aging baby boomer generation, could have a profound impact on the housing market. I believe this, and it's pretty. I believe this. I believe what he's saying. As baby boomers retire and downsize, there could be an increase in the supply of larger homes, which may not match the demand for younger generations. Then points out that this shift could lead to a mismatch in the housing market, with too many larger homes available and not enough demand to keep prices stable. I believe that over the next 1 to 5 years, maybe 2 to 5 years, the supply of homes, the majority of the supply of homes are going to come from the baby boomer generation, right? They own the majority of the homes now. They are getting to an age where, unfortunately, I'm sorry to say this, they're dying, which means that if they don't pass the home down to one of their children who moves into it, it's going to be for sale, or they are looking to downsize and go to active communities, active 55 plus communities, or they want or they need some kind of assisted living. The largest supply of homes coming to the market in the next 2 to 5 years will come from the baby boomer generation. I understand what he's saying, like those McMansions. They talked about those McMansions, but not every single baby boomer who owns a property lives in these big McMansions. A lot of them do, and we have some of those bigger communities in my area personally, those bigger homes. And if they are at the prices they're at now and even going up, yeah, like that is unaffordable. You better believe that's going to be very unaffordable. And if so many of those homes come onto the market, it's going to be difficult for people to afford them. And it could potentially be an oversupply, but there are a lot of communities, especially in my area, a lot of neighborhoods that they're not these giant McMansions. I would say the majority of communities and neighborhoods in the greater Philadelphia area are not 4,000 plus square foot homes. I would say it probably ranges from 2,000 to 3,000, the majority of them, which is what people want, you know? And it's on one hand, you know, the supply that will be coming is great news for the housing market. And sellers will continue to be in a good position to sell their homes, make a good profit from it, and get the terms that they want. And buyers will have more choices. If buyers have more choices, if the supply goes up, then the values will go down. That's how the values go down. If the buyers have more properties to choose from, that's how the values will actually go down. The supply has to increase. It has to. That is the number one thing to do. The supply has to increase in order for the values to continue or the values to start coming down. Now, you might see this in an area where you're like, well, values have already come down in my area. If you're in Austin, Texas, or if you're in Miami, Florida, places like that, the values have already gone down, you know? So you may be in those areas already. You may be seeing it. You may be seeing the supply has already increased enough to where the buyers have choices. And when buyers have choices, that's when the values go down. So I definitely believe in what he's saying there. I know he made mention of the McMansions. I love when people call them that. And again, they're everywhere. You know, they're in most communities. So I definitely believe that. And then the demographic shift could be exacerbated by the effects of an economic downturn, particularly in regions with larger populations and retirees. I get it, you know, because and it's like, all right, when they sell these houses, if they do die or they go into assisted living or 55 plus communities, whatever it is, but you know, they also want to buy. So if they're downsizing, they want to buy smaller homes and there might not be enough for them, you know. So completely understand what he was saying. Now he started talking about the comparison to the 2008 crisis. He drew a parallel between the current market conditions of those that led to 2008 financial crisis, and he argued that the factors driving the current bubble, right, this bubble that we're in right now, such as low interest rates, speculative buying, and excessive debt, are even more pronounced today than they were in the mid 2000s. We definitely have an excessive amount of debt. You know, the US debt is at 37, 36 trillion. It's insane. So again, I don't ever claim to be an expert on that. I don't know how that will translate to the housing market if it's called due. You know, if those loans that we have are called due, I don't know how that's going to translate to the housing market. Will it decrease it, or will the government continue to print more money? You know, I understand that inflation is out of control still, and I understand housing unaffordability is still bad, and that sucks for a lot of people. And then I understand the other aspect of it where sellers are still able to sell their home for a great price, cash in on a lot of equity. But going back to this comparison to the 2008 crisis, the global financial system is also more interconnected, which could make the crash more widespread and severe. He believes that the upcoming crash could result in a deeper and more prolonged recession with significant repercussions for the housing market and the broader economy. Now, it's one of those it's what what I think he's trying to say again is I think he is one of those people that is claiming that the market is going to crash and has been saying it for years, where it's like, if it actually does happen or when it does happen, whatever you believe, he can be like, "Oh, I said that. I said that was gonna happen." You know, he seems like one of those guys to me. Not that he's not smart, not that he doesn't know what he's talking about, but it's like a gamble. It's a calculated risk. I'm gonna say this for years and years and years until it finally happens, and eventually I'll be right. Eventually I'll be right. Oh, well, I've been saying that for the past 5 years. Well, it didn't happen within the past 5 years and you were saying it, right? It seems that way to me. And again, whether the US is going to be in a recession or not, I mean, I guess you could argue that we have been in a recession or that the recession is likely. He talked about the soft landing, and he said there's no way for a soft landing, where you have Janet Yellen saying that, yes, we are going to have a soft landing. I, I don't know. I don't, I tried to stay in my lane, and my lane is real estate. Timing of the crash. So this is important for you guys to understand. Timing is crucial when it comes to navigating a potential market crash. He advises that homeowners who are considering selling should act quickly, which I talked about earlier, as waiting could result in significant losses. He believes that the market is close to its peak and that prices should start declining rapidly once the bubble bursts. Selling now before the downturn fully takes hold could allow homeowners to maximize their returns and avoid being caught in a market where prices are falling and prices are scarce. He never said when it's going to happen. He kind of like made mention to it, but he never said it's going to happen in 2025 or it's 26 or 27 or 28. He never said that. He never mentioned when. So he's like leaving it open ended. He's leaving it very open ended to be right if it happens. And he's like, he doesn't want to be wrong. Okay. So that to me is very frustrating when people are saying like, oh yeah, the housing market's going to crash. Okay. Well, when? And what are you basing it off of? Tell me. When is this going to happen? Why do sellers need to sell now? Because you think they're going to get caught with their pants down if they wait a year or 2 years? You believe that housing values across the entire US are going to go down 50 to 80%? When? They can't say when. It's almost like it's almost like they just want to be right when the time happens. So sell now. That was his whole pitch throughout this entire it was like an hour and 50 minutes. It was sell now. Sell now. Sell now. And I actually can I'll share with you this. I'm not going to play the entire video, but it's interesting to see what people said, right? Because it got 1.5 million views and he just put it out 1 month ago. 5,100 comments, If home prices drop 50%, property taxes should drop 50%. Okay. That's interesting. I think property taxes are way too high to be honest. Talking about the presidential election, who cares? Employers won't raise salaries to match cost of housing, but they haven't done that ever. In the 50s, dad worked a modest job, mom stayed home, and they could afford a house. Yeah. He also mentioned this, which was pretty interesting to me. From like the 20s to the 30s and 40s and 50s, to get a home, you pretty much had to put 50% down. So you had to have a significant down payment. And the loan terms were about 5 years. So you had to pay that house off in 5 years. Whereas now, we have 30-year loans, and even some lenders are coming out with 40-year loans, which is pretty crazy. So the lending standards have changed pretty dramatically. Yeah, so here you go. California mortgage loans. The question is, how many years will this guy say this until it actually happens? I've been following him since 2019 with the same message. See? This is someone else. I've been following this since 2019 with the same message. History doesn't rhyme, but it repeats. Okay. Since we can't create more land, scarcity of supply is always going to be a counterbalance. 50% drop would bring me back to 2000 prices. 2000 prices were higher than 1998 prices. History doesn't repeat unless we didn't learn from our mistakes. Okay. That's interesting. Yeah, I always get a lot from comments of these videos. I'm a loan agent in California. Okay, this is good. I see borrowers struggling to have an offer accepted by sellers because there are so many offers on the table. This was just 3 weeks ago. If things are going to go south with real estate prices, the current market certainly isn't showing it. Rates have gone from 7.5% to 5.875, although new mortgage payments aren't as low as they used to be a few years back. Buyers' payments are a few $100s more than rent payments. See, like, you really have to pay attention. How long is this guy's been saying this since 2019, and there was another video that was extremely similar to this, same interviewer. It was just here on, yeah, Peter Schiff. There you go. 80 to 90% home prices, Peter Schiff is saying. And these are very smart people. These are very, very smart people saying this, right? 80 to 90%. So you're like, oh my God, this guy has a ton of authority. They're multimillionaires or billionaires saying this. Housing prices up 48% since 2020. Heard it somewhere. I see it in my area. 400K starting. Starter home. I mean, yep, that's very, very true. 400K starting home. Absolute smartest decisions one can ever make is to pay off their house and stay put. That's controversial. Period. House is not a bank. Don't think of it that way. Oh man, yeah, it's pretty crazy, right? So you can get a sense of what other markets are like based on what people are saying in these comments. There you go. Back in March of 2016, Harry predicted an imminent collapse of the Dow, worse than 1929. He foresaw a perceived Florida real estate bubble collapse, so he and his wife sold their Tampa home and moved to Puerto Rico. Since that time, the Dow has risen from 17.5 to 38.7. Tampa has become one of the most desirable housing markets in the nation, with home prices in select zip codes 128%. So you really just have to take all this in with a grain of salt to what people are saying and making predictions, because a lot of these people, again, have been making these predictions for a very long time. They've been saying the same thing for a very long time. Okay. Does that mean that it's not going to come true at some point? No, not necessarily. It doesn't mean that at all. But you really got to focus on your local area. I cannot worry too much about what's happening in Dallas, Texas, where I'm at. If I think anything that's going to happen in Dallas, Texas is going to happen in Downingtown, Pennsylvania, I'm going to worry the crap out of myself. I can't compare myself to Houston. Houston is in like the hurricane alley right now, right? So major disasters like that can severely affect the real estate in that area. I'm not too focused and concerned about major hurricanes wiping out things in my area. Like, yeah, we get strong storms now, but nothing like Florida, Louisiana, Alabama, parts of Texas. Major major weather events can absolutely affect the real estate in certain areas, but it's always going to be hyper local. And trying to push that narrative like, you need to sell your house now. You need to get out of it now because the market's going to crash. I've been saying this for 5 years now. And then, as you saw in that one comment, he was saying it since 2016. And the stock market did go down in 2020, but then it shot back up. Real estate has been on an upward trajectory. At some point, it needs to stabilize and start coming back down. Until the supply matches the demand, That is not going to happen. Barring some kind of major economic downturn, weather catastrophe, world war, none of those things I can predict. But barring any kind of major catastrophe or major thing happening, I cannot say that home prices are going to drop 50 to 80% across the board. It's just not likely based on what we're seeing right now. Yeah. So I hope you got some value from this. It's football season. Super excited about football season. My Eagles are on tonight. They're playing the Packers in Brazil. Or actually, I'm sorry, it's not Friday. Oh my God, it's Thursday. The Chiefs are playing Baltimore. That's going to be an amazing game. Jackson versus Patrick Mahomes. It's going to be awesome. My Eagles are playing tomorrow night in Brazil for the first ever NFL game in Brazil. Super excited about that. They're playing the Packers. It's going to be an awesome game. I'm in Dallas right now. I'm literally in enemy territory. I'm in enemy territory. It's like both teams, both cities hate each other. But it's going to be exciting. And as far as real estate, man, look, if you're thinking about selling your home, just watch all my videos about how to put yourself in the best position. Watch all the videos about how to put yourself in the best position. And trust your gut, trust your agent. Trust your gut, trust your agent. That's what I'll say. Educate yourself, become knowledgeable of your local market. Learn how to position your house in the best possible way to get the best price and the best terms. You have to be smart. You have to be wise about it. You're not just going to stick a yard sign and throw it on the MLS and sell your home. There's more to it now. There's way more to it now than ever before. So do yourself a favor. Make sure that you educate yourself. Make sure that you are putting your home in the best possible light so you're showing it to the most amount of buyers. And the way to do that is to work with the best agent. It's to work with the best agent. And if you are in a situation where, you have some kind of distress, bankruptcies, or you're potentially facing foreclosure, your house is in a ton of distress, credit's in distress, you need to sell your home, and it's like, oh man, I don't know if I can just I don't know if I have the time to get my house ready, list my home, field all these offers. I just I need to sell it quick. I need a cash offer. Whatever it is. If you need help and you are anywhere in the US, I have connections everywhere with agents, which is great. It's great for you. And I can do the hard work of finding them for you. Finding the right person for you that can help you when you're thinking about selling. And if you want to get the most money and list it and do all that stuff, great. I can find a great agent for you in your area. If you need a cash offer, if you need an investor to come in, great. I can help you as well. If you're in Philadelphia or greater Philadelphia or the Pocono Mountains, my main market, and you need help, that's awesome. Reach out. All you have to do is click that link below. I have a Calendly link below. We'll schedule a time. We'll chat for 10, 15, 20 minutes, however long you need. I find out what you need, find out what you want, and then I can help connect you with the right person that can really help you, that can really set you up for success, because that's what's necessary right now. You need to position yourself in the right way to sell your home for the most amount of money. And again, unfortunately, it happens. People getting into stressful situations and they need help, and that's okay. It's okay. There are people out there that can help you. I'm out there. I can help you. I know what it's like. I know what it's like. I've helped a ton of people in distressful situations. I've been in them myself. So I know what it's like. I know what you're feeling. I know what you're going through. And there is a way out. There's always a way out. Don't feel like you have to, do everything alone. Don't feel like you're on an island. There's always someone out there that can help you. And if that's you, if you're hearing this and you need the help, make sure you reach out. All you got to do is click that link below, schedule an appointment with me. dropping a new live next week. So this is a little earlier. It's actually 9 a.m. in Texas. So what's that? Back home, 10 a.m. But I'm generally doing these at noon. So I'm going to go back to my normal time at noon and look forward to connecting, man. Reach out if you have any questions about real estate. And I will talk to you soon. And next week, I will be talking to you with an Eagles win, a 1-0 record next